Okay, I'm going to do an analysis comparing the late 90s stock market versus today. Now, I'm going to start with specific stocks so you can see what's going on. Now, I'm looking at a monthly chart. Each candle here, or each bar, is 1 month. So, let me see here. You can see, oops, you can see how there's this trend line. So I draw this line here. And after 13 years, Microsoft comes up. Now, technical analysis, anytime you have this line here and it's going up and it's bumping against it, the more times it bumps against it, that when it finally breaks through, guess what's going to happen, right? Microsoft is flat for a decade, basically. Now, it doesn't look like much because I have this, the way I have it set up, but Microsoft lost a value of 65% over that period. Now, if I were to do, um, not sure where my if I were to do an arithmetic based chart here, you would think Microsoft is a lot more out of control than it really is. Try and bring this over here. Uh, but it's not correct really. This is absolute values. If I show relative values, so this is like from here to here is doubling, and from here to here is doubling again. But you can't tell it because it's you're comparing like $1 to $2 versus 40 to 80. So I usually use the logarithmic and put it back on there. That's what it really looks like. Okay, so put $1 in there. So now notice Microsoft. Okay, a couple things. One, here I have this purple line. This would be a 150-month moving average. But you can see that the further it gets away from the long-term averages, the riskier it is. So like back at the peak, it was, I don't know, 84% above that, right? Whereas at these peaks, it's 73%, still really high, right? And it's only by looking at the longer term time frames that you really begin to see the clear picture. If I show weekly time frames, it doesn't look bad. It's like it's just riding, 150-month moving average, but that denies the bigger monthly time frames. So let's look at Cisco. Cisco is kind of, I think, the best example of the crazy stocks of the 90s because it went from um, in what period is that? Oh, 10 years. Now, keep track of the time frame or the total time. It grew 100% per year for 10 years, which was 200,000%. Okay. If that's not crazy, I don't know what it is. But basically, if you had $1,000, you'd have $2 million at the end of that if you knew when to sell. But again, lines, right? Lines are your friends. Okay. The next thing I want to look at as well, if this now it's worth noting, I think I just realized that Costco is finally at the end of its 24-year bottom. So typically when stocks get up to here, there's people here that are still holding. They're going to sell it, and it's going to slow down the stock. But if it breaks through, it's going to start another run. Uh, yes, people hold it that long, hoping to get their money back through all this. Anyways, let's look at stocks today. Now, I think the biggest stock to look at today is probably the most obvious to anyone who watches markets. That's NVIDIA. Well, guess what? Let me try and take out these lines here. Sorry. Here you have this flat period of, in fact, it was just barely starting in the late 90s, and it did go up 1,000% 3 years, which is pretty amazing. But there's this kind of line here for 10 years. Um, right there, you see this flag. That's how the markets move. Let me hide it off here. But notice the same directional kind of patterns here where it just goes up. I can draw a line right here and it's going up. So I'm going to tell you, I know when NVIDIA is officially done. And it doesn't look like it's anytime soon. Had you bought NVIDIA here, you'd be up 28,000%. So the only question is how long can it go on? Microsoft, I think, was 13 years. Cisco was 11. I looked at S&P 500. I don't know if it doesn't go back farther than that. That was a 12-year period, right? Um, so NVIDIA, how long has this period been active? And you could say it's here it starts or here it starts. Um, 9 years. So this is where I kind of think instinctually we have anywhere from 3 to 5 years left. Um, one other thing we can do is count the number of these bubbles. Now, yeah, you can make money if you buy NVIDIA right here at the bottom every time it hits that monthly moving average and hope it goes up again, right? So there are other stocks I think that are in this. I think Supermicro might be kind of another example here, and this has kind of been crazy. It's gone up 4,000% in 5 years. For a big company, that's a lot, like $26 billion cap. Small stocks can do this in a matter of days or weeks sometimes, but um, it looks like we might just be at another bottom here, although we've been here for, what is that, 1, 2, 3, 4, like 7, 8 months. But I do think NVIDIA might be um, taking off again here. And so, how long has it been going? 4 years. So maybe we have 4 years. Maybe we have 6. Maybe we have 3. But it seems to be somewhere in that range. I do think there's going to be some poster childs of this era. Supermicro, Nvidia. Another one that just went IPO'd would be CoreWeave. Sorry, let me show on the daily. It just IPO'd last month. I think this could be kind of like the NVIDIA. It's the first generative AI company that's publicly traded. So they rent out server farms to companies like Microsoft to do AI generation stuff. So I don't think we're really close to the end based on just purely technical patterns. I looked at the NVIDIA one and just on the weekly chart here, do monthly here. Yeah, let's see here. Okay, excuse me, monthly chart. Okay, so right here, see as this yellow and blue lines turning up, like this is getting ready for another massive leg up. Is what it looks like. Um, and who knows? Maybe from here to here was 1,000%, right? So every time it moves up, it goes up like 600 to 1,000%. So I think we're still in for quite a ride. Yeah, it's way high above the moving averages. And remember, the higher it goes, the steeper it gets, the more likely it's going to crash even harder when it's done. So I do wonder if also because if it goes on longer than the previous stock market craze that went in the 90s, uh, the more massive it gets, the more massive the crash. And so the next crash could be kind of like, you know, the collapse of a society or civilization really. So we'll see. At the end of the day, the Fed will try and rescue it, but will the people trust it? Will there be money there? Will it be a fiscally sound nation? I don't know. Um, but buckle in your seatbelts. That's all I'm going to tell you. I wanted to talk about was how many steps upwards stocks tend to move. Um, in the late 90s, it was kind of tricky because a lot of them would kind of go up, make these little incremental moves. Uh, but 3 is pretty good before they go down. 4 is unusual. I'm going to find a few and show you. Now, this is the weekly chart for Amazon. Let's look at some other ones here. Again, lots of little ones, but if we look at the monthly chart, you can see Microsoft is making, there's 1, 2, and then a massive one up for 5 years. Whereas, uh, let's find some other ones. Let's see. Cisco again. Now, I haven't looked at any of these, so we're just kind of doing this off the cuff. So there's kind of 1, it gets flat, and it goes up. 2, really smooth though. So that's why I was using that trend line more in this case. Okay, a lot of them are pretty like straight up, but here's Oracle, one of the other examples. You can see this is 1 move up, 1 step. There's 2, and then you get this kind of crazy vertical climb at the very end. This is what you call like a blow off top, where it went 1,000% in 1 year. Mind you, NVIDIA just did that last year. I'd have to look at it some more. Um, And again, you don't think this is a big drop here, but it drops 85% over the next 2 years. Um, so even though let's say you bought it here at 5 cents, wow, 5 cents, and you were up 100,000% roughly, okay? At the end of this drop, you're back down to 15,000%. So you lost 5/6 of what you made coming up to the peak here. In fact, I just thought to look at Tesla because I remember it making steps 2 really clear. So this has been going on for 14 years. So 1, 2, 3. Now the question is what go up 4? Well, I can tell you based on this pattern, the odds of it going forward look really good at this moment. So, especially if it clears this all-time high. So we could see Tesla go up another, um, 1,000% like it did back in 2020, 2,000%. It's hard to say. Like there may be this huge vertical climb in it before it all crashes down. So one of the ideas behind stock markets is the stock market can stay rational longer than you can stay solvent, which means that for people that sit on the market for a long time, um, the market may make a lot of people rich. Everyone else thinking it's going to go crash sometime soon, but you don't know how long these bubbles can last. So although I was showing you monthly charts, let me show you like there's a Tesla, for example, in the 2020 boom. You can see on the weekly how it makes 1, 2, 3, 4 before it's, well, there you go, maybe 5. Um, that's kind of hard to say, but before it smooths out. So here we are, 4 or 5 years, kind of going flat. If it goes up again, okay, just think of it as like stairs. Chances are it's going to go like looking like this again. So maybe the release of the robots will um, is what's going to accelerate this, and I think he's banking on that too, right? So just as an example. All right, I don't know if I talked about super micro much. Here was making a bunch of little steps, but as it got going, you might say this is level step 2, and notice how flat it is on level 2. That's really good. And then it went up 200 more percent after that. Well, based on my little averages here, I would say that super micros in for about to go for another run. Um, and again, if we look at the monthlies, this could be just the first of one major leg over the next couple of years. So the super micro could just go up to, it could be another 100,000% kind of stock in the long run. Mind you, it's already up, 1,000%. So you'd have to go to like $400 before it got to that point. But good job if you bought over here. Anyways, that's the end of my analysis here on the market. I guess we could look at NVIDIA. Let's do it one more time. 1, 2. Now the second one was a bit rough here. This is 2023. Now, right here, NVIDIA could slow down and go sideways for another year. But if it goes up again, uh, I tend to think because it's really short and flat that it's just going to go parabolic. And that could probably be the last phase of the cycle, maybe another 2 years. Considering it's a market leader, I would probably trust this chart the most. Okay, to show that this actually applies to pretty much any thing in the world. I actually wonder if it applies to economics and political events and stuff such as war. But back to the point, here's silver, okay, commodity, and there was a run up back in uh, 2005, 2011. This is a commodities boom that's going on. Now notice you have this, one. Start drawing my charts here. Um, oh, I can't do this. There's one. And then the second one, is kind of a kind of went up. You can see where it kind of went here, but then it totally crashed. It recovered and then made the third one up. Now on the third one, Look at that. I mean, it just goes parabolic. Now, some people were telling me, like right around here, this is a great time to buy silver. Well, let me tell you something. If anyone's telling you to buy something that's doubling every other week or month, that is the worst possible time to buy because chances are you're buying up here, not down here. So that's silver. And back in the 70s, it looks the same. So here we go. And there's maybe leg one. It's up 100% over, what is that, a couple of years. So the commodities can move a lot slower. Any stocks can do this in a matter of days or even hours. But um, there's your second leg. It's up 200% in some year here, up about a year. And I mean, this is really um, really clean, right? So put a line there, here, doesn't matter. It's not the point. Um, but notice on that last leg, now again, this is logarithmic. Uh, I mean, this is nuts, right? So again, if something's doubling every few weeks, you know it's time to run. Uh, good things will kind of gradually climb over time. Now let me go back to gold for a minute. Those corn futures. Hold on. And show the same patterns here. I'll take off my dumb drawings here. And so let's go back to, so this is the 1970s. Now I notice now, so you can see again in each of the ways, for example, if you want to call it a wave, this is 1, 2, 3, 4 steps over a period of 2 years. And after that fourth step, it crashes. Let's see, each one of these smaller steps becomes one of these part of these bigger steps. Now what's interesting about gold is you can't really tell if this is like an accurate chart here. I mean, back here, there's not really a lot of data. But if we were to say gold only had two legs, that's because I guess it went straight up at the end of 1979. And this is where it actually doubled in, where's my arrows? I don't know. 600 to 800. Maybe in a month, it looks like it almost doubled. Right, and then not to bore you, but here's like an engulfing candle, like it went up and it just, completely engulfed the previous one. You know it's absolutely over without a doubt. And then look, so gold then drops down for literally decades before it starts making a recovery. Look at that. So, and this is the bull market, stock market here. Okay, and here we are. Here's a new run. Now this is a lot choppier because it doesn't make like these big clean moves. Um, but someone up here called gold the ultimate bubble, I would say, as it progressively, I mean, you see, that's just, this looks like the end right here. Sure enough. Uh, and so, but if you look at the longer time frame, just go to monthly chart here, okay? That's what we just looked at there. And then you see it goes straight across. There's this flag. So it's kind of, this is a long-term picture of gold, right? So here's maybe the first major leg over 20 years, so whatever that is. I'm not gonna do the math, 30 years. There's a second step. Now you can tell gold is gone pretty haywire again. Again, this is set to, oh, this is not logarithmic, excuse me. Okay, let's do that again. Okay, so 70s, 2000s, and if it's like these previous moves, look, they go from $300 to 15. So this went up 500%. Back here, it went up 40 to 100 or 1000%. So we have to ask ourselves as it breaks and starts this new trend, what percentage will go up? So it's up a little bit from where we started here in 2024. But, let's say over the previous ones, it took maybe over 10 years, gold will triple, quadruple, quintuple in value, which is interesting because I argued with someone a couple years ago, some economist at a college. He said gold was real expensive based on the value of gold, what you can buy. And I said, yeah, but technical analysis says something completely different to me. And so that's why I came to the conclusion then that gold is kind of more of a well, there's a lot of reasons, I guess, but inflation's not really one of them. A lot of it has to do with fear, um, failure of currencies, things like that, or at least the fear of failure of currencies. So, and I think there's a lot going on in the world today. All right, so that's gold. Um, now, I yeah. So one interesting about this too, I forgot to mention is, you know, these are really big markets, right? So while penny stock can go up 1, 2, 3,000% sometimes in a matter of days, the bigger the stock, the less likely they can take these monster moves without kind of coming down. I mean, how could Walmart become worth 10, 20, 30 times more in a matter of months, right? It just doesn't make any sense. So these bigger kind of products, market stocks, whatever, um, they're in some ways a lot more useful to keep track of what's going on in the world than the markets. Okay, so wanted to point out one other item here. So in the dot-com bubble era, the it was all fueled by speculation of future revenue from the value of the internet, right? So a large portion of it at least. Um, but if we were to kind of find the parallel story today, it would be AI, and AI will save the world, not. And but the difference is, this time around, AI can be used to generate huge amounts of money very quickly. And so it's possible that this uh, phase we're in here could go on for 5 more years, 10 more, and it could go straight up. I mean, parabolic as the world is just accelerating. And so that's one possible outcome. And I'm not saying it will likely happen. Um, again, these are kind of down, kind of down. Now NVIDIA is kind of flat. This is probably the best time actually in the markets traditionally to um, right? As a trader to get in, this is the best time. So I kind of think we're going to see NVIDIA go up a lot more. And speaking of which, I should probably look at Bitcoin and make some analysis there. And so I don't have a full screen on this, by the way. It's just for recording. Um, all right, Bitcoin. Here's the history of Bitcoin, right? So one, this is 2016. Two, notice it's way more up and down than traditional stocks, and so and here you have this line. Now, I don't know if I can draw it on here. There you go. See that? Um, Not very nice and pretty, but this may be the second phase of Bitcoin, and maybe the first, right? I mean, or maybe the second out of 4 or 5 even. But this is why I do think Bitcoin could go to uh, hundreds of thousands, maybe a million. Anything's possible. Not that I'm saying it will. In fact, one final point. I begin to think today that technical analysis is actually a lot more about human psychology than it is about fundamentals. And so that's why the truth is in the tape. And it shows where the money's actually going. Whereas fundamentals or theories, technical shows where the money's actually being put. And, follow the money is an old phrase, right? So following the money, I think Bitcoin, like it could bounce around for even a year or two still here, but um, it looks like it's got a long ways to go on this upwards trajectory. In fact, let's look at the month. So you see where it's going. Yeah, good thing I didn't buy it in 20, you know, 13 or whatever it came out. Can we do one final look at NVIDIA? I think so we're at this junction right here, juncture. Uh, and you can see it's really already high above the orange, right? So it's, I was at 50 months or just doesn't really matter. Um, but when it comes down and it settles down, that's good. Now, if it goes straight across and just starts taking off again, it's going to be way above the oranges, and so it'll be far more parabolic. Um, and I do think that being straight for so long is a much more likely it'll go up than if it's down here, right? Here goes down, and it did come back. But so if it does go up over the next couple months, uh, this is increasingly parabolic territory is my point. So it may be that, each leg, what is this? 1.5, 2 years. Let's say this one, 2 years. So it's possible in the short end we only have one more leg and it's 2 years. Um, on the long end, we find that every company in the world is spending on AI, which is happening right now at crazy levels, to increase productivity, that somehow earnings start to catch up. And I've heard someone say that that's actually going on. Because right now the Wilshire Index, which is uh, stock market to GDP ratio, it's really high. It's like probably third highest in history, which is a sign of a bubble. So that's a really important metric. I guess is Buffett's favorite because um, how can the stock market be worth 2 or 3 times what the average GDP has been, right? It can't. It can't be worth more than what the country's actually making. So that's a really good indicator when things are expensive and cheap. So uh, and again, depending on your starting point, that's what makes it, kind of a guess as to where we are with these things. But we're clearly very high. So I kind of hope NVIDIA just goes sideways or comes down for another year. But like I said, bouncing off this blue and yellow line like that, chances are it's gonna, if it has really good earnings next month, that's kind of set the tone and pace for the market. So if it has really great earnings, which I suspect it will, because I'm seeing the rate of spending on AI stuff going up still. Microsoft is still spending a lot, for example. Then this thing will go up another, who knows, 1,000%. So making your, what are we at, 24,000%. So I don't say I could go up another 1,000%. It might, but that means it would 20, was it 20,000? That means it would actually achieve 200,000% growth over a period of 16 or 17 years. Now maybe that's slower than the dot-com bubble, so it can sustain it for longer, right? So, but to me, it's the higher it goes, the more dangerous it's going to be. So, so the question is, when is the market toast? Well, there's two ways stocks fail. One is they kind of, go kind of parabolic bending up. The other one is they go kind of bending over the other direction. And this is just kind of on a channel, just going sideways. It's neither. Um, but I would say when it crosses this imaginary line here, uh, I would be completely out. And again, sometimes it can go across it and stuff. Um, I say a lot. I got too many pictures on here. Hold on. Oh gosh. Anyways, trying to draw a nice line here. So each time, and this is really just like either a sideways channel that we're looking at, or you can see this as an inverted bottom, and once it finally breaks through this trend line, it's going to go downhill. Um, doesn't look like it's anywhere near there. So